Narayan, am I audible?
Yes, sir, but that still problem.
Yeah, kirikiri. Hello. Still it's there, or when I speak only at that time?
Sir, when you speak only that time, sir,
Now,
it's clear. Sir.
clear?
Little bit, sir, little bit.
No, if you are able to make out what I'm speaking, then I don't have any issues. But if you're not at all understanding what I'm speaking, then I need to change.
Now we can understand.
Okay, fine. Okay, everyone, please come in the video mode. Okay, everybody, please come in the video mode. Akshata, Swapnil, Saraswati, Tejaswini, Rohan, Kranti, how are you? Long time not seen.
Yes, sir. Good, sir.
Good. Good morning.
Yes, sir. Good morning.
Kranti, had breakfast or no? Or you're getting up now?
Sir, I had breakfast, sir.
Good, good. Okay. Why is the strength low from morning for all the classes? Or everybody is in the festival mode from now itself? How many have joined? Only 12 have joined so far. Okay. Okay, guys, should we get started? Only 12 have joined. Okay. Fine, guys, I'll just start the class because I don't know whether people will join or no. Okay, we'll just definitely start it now. And it's followed by a break, so I don't want you to miss your breaks.
So there is disturbance.
Now there is a disturbance, or it's clear?
It's clear, sir. No disturbance. Now it's clear.
Now it's clear? Sure?
Yes, sir.
Because before you all joined, me and Narayan had adjusted all the sound, and he said the sound is clear. Now, if anything goes wrong, then you have to blame Narayan, not me. Right, Narayan?
Yes, sir. Okay, sir.
Okay. I hope it is clear now.
No, sir.
No, chill sound is not coming. No.
Even your voice is low, sir. It's not clearly audible.
My voice would be low because I've kept the headphones far away now to avoid that sound that you were hearing.
Sir, but that sound is crystal clear, sir. No.
Nah, I'm not going to waste so much of time in all these things now. Every day. Now check, Nunali.
So now it's clear.
Sure, it's clear.
Yes, sir.
Okay, thank you. Okay, I'll just share the screen now. Okay, yes. Okay, so in the previous class, we had started with NBFCs, that is non-banking financial companies. And if you remember, we did, okay, we started with what is, okay, I'll just start from beginning, just overview. Okay, what is non-banking finance companies, then the overview of NBFCs, like how when they are registered with RBI, not registered with RBI, but regulated by RBI, and when they are registered, not registered, neither are regulated by RBI. Okay. Then we have features of NBFCs, like what are the various features that are there. Okay. Then we tried to understand the different types of NBFCs, in which we said equipment leasing companies are there, then hire purchase companies, housing finance companies, okay, investment, and so on. Okay. Then we studied the functions and working of NBFCs. How do they work? We studied the law of numbers, economies of scale, inducement to save, etc. Okay. And then we had started with services provided by NBFCs. Okay, where we have studied almost all, I guess, except the last one. Okay, I remember while I was explaining the last one, the meeting was ended, right? So I'll start with the last second now, and then we'll go on to the last one, and then continue with the next part. Okay, so we were talking about the various services that are provided by NBFCs. Okay, just to brief you, it helps you in mobilizing the funds that you have. Then easy, simple, and adequate credit is available. Very easy. The procedures are very simple and straightforward. Okay, less paperwork is what is there in NBFCs. Then it acts as a financial supermarket because many products are available at one place, so they act as a financial supermarket. Various financial services are provided at one place, so that is why it is called as a financial supermarket. Then channelizing funds for productive purpose. Okay. Yes, they help you. They help in providing finance wherever is required. Like if you want to start a new company, a firm, then getting loans from these NBFCs becomes very easy. So they help in channelizing funds for productive purposes. It helps in increasing savings of the people. In turn, okay, it so whatever saving, because there are lots of schemes available where you can get more returns, you tend to save a lot of money to invest it into those schemes. Okay, so it induces savings. Then provides housing finance. Yes, small houses, if you want to construct small houses, and you want to get the loans quickly with less paperwork, then you can go approach an NBFC for home loans. Okay. The only disadvantage here would be the loan rate. The interest rate would be very high for an NBFC as compared to a normal nationalized bank. Okay, because the NBFCs are taking more risk when they give you loan, whereas a scheduled bank is taking, or a nationalized bank is taking less risk, as they do a lot of paperwork, etc. Okay, so that is the reason why NBFCs charge you higher interest rate in terms of housing finance. Then increased standard of living, definitely whatever you want, whatever you actually want to increase the way you or improve the way you live, or that is increasing your standard of living, you're getting it in the form of loans. Like if you want home appliances, or you want uh, office equipments, let's say a computer or laptop or a printer, you have NBFCs who finance those equipments. Then if you want to have a car, yes, there are NBFCs who will finance you a automobile, a car, or a two-wheeler. Okay, if you want a house, there are NBFCs which will give you which will help you in getting a house at a uh, uh, by providing finance. So in turn, what is happening is your standard of living is increasing. Okay, you're moving from one house to another house which is comparatively bigger, you're taking a new vehicle, your standard of living is increasing. You have home appliances that eases your life, that increases your standard of living again. Then next one is promoting economic development. Basically what happens is, when you do all the above things, naturally economic development happens, because when you have money in your hand, you try to spend a lot of money. Like you buy vehicles, you buy home appliances, as I said, you buy home. In turn, what is happening, the money is flowing into the market. If there is more money which is flowing into the market, definitely there is economic development, because you tend to pay more tax. Okay, you tend to maybe it is direct tax or indirect tax, you tend to pay more taxes to the government. When the government receives more and more taxes, definitely there is economic development that is happening in a country. Okay, so every country wants people to spend money, they want the money to flow, they don't want people to just keep money into their pockets or into their almiras. Okay, so they want the money to flow, so that there is development. Fine. So ultimately NBFCs will help you in in economic development. Last one is rendering investment advices. Okay, the investment companies or merchant bankers, normally they are into investment services, so they also provide investment advices as to where to invest, how much to invest, when you have to come out of that particular investment, and n number of other advices are given by the investment bankers. Okay, so they are also NBFCs again. The NBFCs can also play a role of an investment banker for rendering investment advices. So that is another service that is provided by the by NBFCs in the form of investment banking or merchant banking. Okay, so I hope you're clear with all these. How many? Around 10 services. Are you all clear with all these 10 services? 10 or 9, I guess. I'm not comfortable. 9 services, yes. Okay, so if you are clear with this, let's move on to the next one. These are called as prudential norms for NBFCs. That is the norms that are governed, that the NBFC has to follow, the rules and regulations that the NBFC has to follow. So they are called as the prudential norms. Okay, so these are the norms as per the RBI Act. Okay, as suggested by the Narsimhan Committee. Okay, so in each and every NBFC which has been registered or regulated by RBI should follow all these norms. Okay, first one is income recognition. Now, what is this income recognition? It is basically based on the accounting principle of cash. Okay, income is recognized whenever you receive cash. Okay, it is on cash basis. Okay, so whenever you receive cash, you have to treat it as income. This is for an NBFC. Suppose you are an NBFC, I'm telling. Okay, so treat yourself as an NBFC, and when you are an NBFC, you have to follow all these guidelines or all these norms that are set by RBI. Okay, so first one is income recognition. So whenever you receive cash in form of deposits, in form of schemes, etc., you have to treat it as income. Okay, so that is what income recognition talks about. Second one is
So,
yes.
So there's a lot of noise, so
Oh, just a minute. Nagesh? Am I audible now?
yes, sir.
Yes, sir.
Yes, sir.
It's clear?
Yes, sir.
Yes, sir.
Yes, sir.
Okay, okay. Okay, fine. Just give me a minute. Okay. So I was talking about the prudential norms for NBFCs. That is, these are the norms, rules and regulations that are set by RBI for governing an NBFC. Okay. So I was talking about income recognition where I said, okay, the whatever cash you receive, it is on the cash basis. So whenever you receive cash in any form, whether it is for in the form of deposits, whether it is in the form of schemes, contribution for schemes, or your investment into various policies, all these are called as income. So they should be recognized as income. Then income from investments, like whenever you talk about NBFCs, they tend to invest into lots of avenues like shares or debentures or bonds, etc. So whatever interest or dividend that you are getting from these sources, they are to be treated as incomes from investment. Okay. So basically I'm talking about the accounting, how accounting is done. So the prudential norms also are basically more related to how the books of accounts to be maintained and where various items have to be entered. Like if it is income, where it has to be entered, when it is income from investment, where it has to be incurred, where it has to be recorded, sorry, where it has to be recorded, etc. Are is what I'm talking about now. Okay. So income from investment is whenever an NBFC does any investment into shares, bonds, debentures, etc. Okay, it receives interest on that, or it receives dividend on those shares. Okay. So all these have to be treated as income from investments. Okay. Next one is uh, we talk about accounting standards. So all the accounting standards, all the 31 accounting standards which are there, the Indian accounting standards, should be followed as it is in case of NBFC. So there is no any exemption for any standard to NBFC. So all the accounting standards have to be properly followed when they are when they are preparing the books of accounts, basically. Okay. So that is accounting standards. Fourth one is accounting for investments. Okay. So accounting for investments is basically uh, there should be a proper policy set by the directors of the company going to treat the how they are going to treat. I'm sorry. How are they going to treat the investments? Like investments in the sense long-term investments, short-term investment, current investment, past investment, future investments. Investments that having. So how are they going to account for it? How are they going to prepare accounts for it? So there should be a proper policy framed by the directors, and the NBFC has to follow those policies. So there should be a clear-cut policy that the directors of the company have to make to treat these investments, or to record these investments. Next one is about provisions required. Basically comes under asset classification. Okay, because most of the NBFCs are also into providing loans. Okay. So when I say loans, there is a question of NPA. What is NPA, guys? What is NPA?
Non-performing assets.
Yes, it is non-performing assets. Very good. Okay, now non-performing assets is whenever you give a loan, Okay, and you basically receive interest and principal, right? Once the borrower stops paying the interest and the principal amount for a particular period of time, after some years, maybe it's 3 years, what we normally say 3 years, it becomes an NPA. Okay, so there are stages to it. So that is how the provisions requirement are defined. So I'll just tell you the stages. But first, what I'll do is I'll do the asset classification. Classification is the assets are classified into loss assets, doubtful assets, standard assets. Okay, standard assets, which basically there is no problem at all, and you are getting regular income, interest and principal is regularly paid on these assets. They are called as standard assets. Second is doubtful assets. Now doubtful assets are further classified into up to 1 year, 1 year to 3 years, and 3 years and above. Okay, remember, first is standard assets, where the interest payment and the principal or the installments are regularly paid, so no issues at all, they're good assets. Second is doubtful assets, where there is a doubt. So in doubtful assets, we have three types: D1, D2, and D3. D1 is if the interest and principal is not paid for 1 year, up to 1 year, it is D1. 1 year to 3 years, if it is not paid, okay, after 1 year to 3 years, if it is not paid, then it becomes D2. And after 3 years also, if it is not paid, then it becomes D3. And after D3, it becomes a loss asset. Okay, that is if they are not paid at all. I'm sorry, if the installment and the principal remains unpaid for more than 3 years, okay, it becomes a loss asset, and those loss assets have to be written off books of accounts as loss. Okay, so now on the basis of this classification, your provision requirement are there. Then you have to create provisions, basically, because these are losses and you have to create provisions on this. So what are the provisions that you need to create is, then the provision would be 10%. Okay, 10% of your total assets should be the provision kept for standard assets. Then it is D3. Okay, it's 20 for D1, 30 for D2, and for loss asset it is 100%. So 100% provision is created, and the loss assets are written off from the balance sheet. Okay, they are basically deducted from the balance sheet. This is breaking. Is it still breaking? Is it clear?
It's happening in between, sir. Like there's also disturbance, and in between your voice is also not audible.
Okay, now it is audible.
Yes, and now it is.
Okay, Preeti, can you tell me what you did not understand? Like, if there was a disturbance in between, then what was the point that you did not understand, Preeti?
So what you were saying now, I couldn't hear from last 5 minutes.
You couldn't hear a single thing in that, the entire provision
No, sir.
requirement?
No, sir. It was breaking.
Was it with everyone?
Yes, sir.
And somebody could have told me in the beginning only, no? Okay, fine. I'll start with it again. Okay, now it's audible, I guess. Now there is no disturbance. My voice is clear.
Yes, sir.
Sure?
Yes, sir.
Okay. Now, provision requirement means they are the provisions that you need to create in case of your NPAs. Okay, that is non-performing assets. Now, to understand non-performing assets, we have to first understand the classification of assets. Now, assets are classified into three types, that is standard, doubtful, and loss assets. Standard assets are the assets where the interest payment and the principal repayment is done regularly, so there is no problem with those assets. So that is called as standard assets. Okay. In case of doubtful assets, they are further divided into three parts, that is D1, D2, and D3. So D1 is when the interest and principal repayment does not happen for for a year, up to a year. If it is not paid, then it is classified as D1. After a year till 3 years, if it is not done, then it is classified as D2. If it is more than 3 years, if it is not done, the interest payment and principal is not done, then it is called as D3 and then converted into loss asset. So after 3 years, it is once it becomes D3, later it gets converted into a loss asset. Okay, so that is what is the asset classification. And on the basis of these classification, you have to maintain provisions, because since these are losses, you have to create provisions for losses. That is what your convention of prudence says. Okay, that is you have to create provisions for the losses that you are expecting in future. Okay, so what are the provisions? First of all, for standard assets, the provision is 10%. You have to create a provision of 10% on standard assets. If it is D1, then it is 20% of the provisions to be created is 20%. If it is D2, then it is 30%. D3, it is 50%. And if it is a loss asset, then 100% provision should be created, and such losses have to be written off from the balance sheet. That is what is your provision requirement. Now it is clear. Is the provision requirement clear to everyone? If it is yes, please give a thumbs up, guys, so that I can go ahead. Okay, great. Okay, so coming to the next one, that is disclosure in the balance sheet. So basically, all the important information related to NBFCs, or that is the company, should be disclosed in the books of account. That is your if you remember the convention of disclosure. So all the important information related to the company, which is going to affect the shareholders or the stakeholders of the company, have to be properly disclosed in the balance sheet. Basically, your provisions for bad debts and doubtful debts, provisions for depreciation, etc., have to be properly disclosed in the balance sheet, in the books of accounts. That is what this disclosure in balance sheet talks about. Next one is constitution of audit committee. Every NBFC has to constitute an audit committee for verification of the books of accounts. Okay, the books of accounts of NBFCs have to be verified by this audit committee, and a report should be submitted. Okay, so that is what constitution of audit committee is. So basically, the audit committee they consist of around 3 members. Okay, at least 3 members is what is required, and I'll just tell you the section. Okay, it comes under the section 292A of the Companies Act. Okay, under where it specifies that any NBFC has to formulate an audit committee of at least 3 members. Okay, so that is what is the condition. Another condition there is your assets should be, if their assets are more than 50 crores. Okay, if the 50 crores or more, then you need to have an audit committee of minimum 3 members, okay, who has to audit the books of accounts of that particular NBFC. And last one is capital adequacy norms. Now, this capital adequacy norms is basically how much capital do you need to have. Okay, whether you have enough capital to meet the requirements or no. That is called as the capital adequacy norms. Okay, so there is a minimum ratio that you need to maintain for tier 1 and tier 2 capital, equivalent to 12% of the aggregate. Okay, and okay, just give me 1 minute. Okay, so there is a capital adequacy norms is basically the minimum amount of capital that you need to have to that you need to maintain to meet all your requirements. So there are lots of norms applicable. It depends on tier 1 capital, tier 2 capital. There are different classifications of capital. Okay, so you need to have 12% of tier 2 capital, and around 100%, not more than 100% of should be your capital adequacy ratio of tier 1 capital. Okay, so basically it's a ratio which talks about whether you have adequate capital or no. So every NBFC has to follow these norms to maintain the minimum level of capital to ensure the proper capital adequacy ratio. Okay, coming to the next one. Okay, just give me a minute. Okay. Okay, coming to the last part of NBFCs, I'm going to stop it over here when after discussing this point. Okay, because next is microfinance. So we'll just have a small discussion of microfinance, and then later in the next class we'll discuss in detail what is microfinance. Okay, so importance of NBFCs, why it is important, because it has greater reach. Okay, um, as we have already discussed in features in that NBFCs have a greater reach. They are available. They are located in almost all the regions in the country, so they have a greater reach. That is one importance, and they are useful in providing financial services to each every nook and corner of the country. So that is one importance of NBFC. Second one is flexibility in tapping resources. Yes, since they are available throughout the country, small resources are easy to tap. Okay, they are able to tap the resources very easily, provide finance to smaller people. Okay, and help them in tapping those resources. That is how they indirectly help in tapping various resources that are available in the country. Okay, so that is why it is important to have NBFCs. Okay, because all the nationalized or scheduled banks cannot reach each and every corner, though they have to, but they cannot reach due to various constraints. But NBFCs, since the investment is low, and it's possible for an NBFC to reach the smallest of the parts of the country. Okay, so that is the reason why they are able to tap the resources. Also, the unutilized resources are easy to tap using an NBFC. Okay, using finances provided by NBFCs. The next one is retail services to small and medium business. Okay, they are known for providing retail services to small and medium businesses, because most of the small and medium businesses, they fail to take loans, or they fail to get loans from nationalized or scheduled banks because of lack of uh, assets available. They are unable to take secured loans. Okay, and in that case NBFCs help them in getting loans, because as I said, the procedure is less, the securities provided is comparatively more easy, or more is less as compared to nationalized banks, and so on. The percentage of loan that you get is more in terms of secured loans. So that is the reason why it is helping the small and medium enterprises in doing good business, or helping in the growth of small and medium enterprises. Okay, and last one is important component of a financial market. Definitely. Okay, it is an important component of financial markets, because all your nationalized banks and scheduled banks, since we have already discussed, cannot reach each and every person in the country. So NBFCs provide supporting and specialized services to each and every person. That is why it is a most important component of financial markets. Okay, another importance we can say is they are specialized agencies, guys. Like if it is a home finance company, then that company is specialized into home finance. They know each and everything about that particular home loans. Okay, so okay, so that is the reason why they can provide specialized services in terms of vehicle loans. Let's say Shriram Finance. Okay, Shriram Finance is purely into providing loans for vehicles. Okay, whether it is commercial vehicles or your private vehicles, etc. Now they are specialized agencies, so they are specialized into that, and they provide better services in terms of providing loans to vehicles as compared to other banks or financial institutions. That is another importance of NBFC, which is not mentioned over here, but you can definitely write that, because since they are specialized agencies, they provide more better services as compared to other financial institutions or banks. So I hope you're clear with this concept of NBFC. Is everybody clear with the concept of NBFC? If yes, give a thumbs up. I'm stopping over here. Okay, if everybody is clear, please give a thumbs up quickly so that we can stop. If you have any doubts in whatever we have discussed today, you can go ahead, unmute yourself and ask. Okay, I hope there is no doubt. I'll just click a pic of your attendance. Okay, so thank you guys. Have a good day. Take care.
Thank you, sir.
Thank you,
Thank you,
sir.
sir.